American Business Council, and I want to introduce the panel we have on board. So Mr. Dipo will do the welcome remarks, and then we'll hand over to Abayomi Olarinmoye, who will share insights on unlocking growth in the consumer space. Mr. Dipo would join us in a sec. Thank you. I apologize, Mr. Tupo is having issues joining in. So we'll go straight into the session. I would like to welcome on board Ms. Olarinmoye, who is a senior partner at Verraki, and she deals with the real sector. She would give an overview of and insights to the consumer space and also the opportunities. Hello, Ma, over to you. Hello.
Okay, can you hear me now?
Yes, we can hear you.
Okay, good afternoon, ladies and gentlemen. My name is Abayomi Olarinmoye. I head the real sector for Verraki. I'll be sharing some of our insights from the consumer products sector with you. And I'll start by first looking at Africa's growth fundamentals. So what we did was to compare a few countries in Africa to even check who is growing. And from the table you can see, I hope you can see my screen. Do let me know if you can see my screen. Okay, thank you. So from my screen, you would see that the largest economies in Africa are Nigeria, South Africa, Egypt, and Algeria, with Kenya a distant sixth. However, the fastest growing economies are Rwanda, Ethiopia, Cote d'Ivoire, and Ghana in that order. But in addition to this, we observe that the countries with the best growth in the consumer products sector are Ghana, Kenya, and then Nigeria in that order. If you look at unemployment between Nigeria and South Africa, we have the highest unemployment rates in the region. If you look at budget to GDP, you can see where Nigeria is, you can see where South Africa is. And we asked ourselves, what are the key drivers in the consumer products markets? One of them is increased spending, which trickles down. 25% of Nigeria's budget is focused on debt servicing. So whatever our budget size is, the fact that a quarter of it is focused on paying back debts, and a huge chunk is focused, so that in itself limits how much is left to spend to trickle down to the consumers. Population density, however, is also a key driver. Availability of credit to the private sector is very important. Supporting infrastructure that facilitates sales is very key. And overall, when we look at the world, we see that Africa is in a prime position to dominate the FMCG market. 2/3 of Africa's $1.4 trillion spent in retail was on FMCG goods. Never mind the fact that we don't produce a lot of that, but 2/3 of what we spent in retail was on fast-moving consumer goods. All over the world, wealth has fallen by $7.2 trillion. So you can see this graph showing Asia Pac, Europe, Africa, North America, and Latin America. What we've done is to highlight China and India, given that they're the only ones that have grown wealth per adult in the significantly when compared with other countries. So in most countries, global wealth has not grown. What are the other key drivers in CPG markets? Like I mentioned earlier, credit to private sector. When there's limited credit to private sector, then you cannot stimulate consumer spending. When you compare Nigeria with other African and non-African developing nations, we rate very low when it comes to available credit to private sector, which in turn would stimulate consumer spending. Ordinarily, you would think that with our reduced tax rates, that this means there's increased disposable income to spend. But that potential is offset by the high consumer purchasing index. So our CPI is high, inflation is high. We took another look at Nigeria, India, we picked a country in Asia, we picked South Africa, and we picked Kenya. Looking at GDP per capita, you can see that Nigeria comes third, and that's a function of size, really. But when you look at inflation and CPI, consumer price index, you'd see that Nigeria is leading the pack, which is not so nice. If you look at GDP, you would see that India is well ahead of everyone else. In terms of population, India also has the population. In terms of domestic production, GNP, India is also ahead of everyone else. And we looked at the outlook for these 4 countries. In terms of size, we see that the FMCG sector is the 3rd largest contributor to the Nigerian economy. It's estimated to be at 16% of GDP. It's the 4th largest in India. It's the 4th largest in South Africa. And retail is the 5th largest in Kenya and contributes just 8.4% of their GDP. But we also looked at the impact that policy changes are likely to make or have made to consumer products. The land border closure in Nigeria and the fact that CBN put a list of 44 items that are not eligible for FX on the list. So all these policy changes have had an impact on the consumer product sector in Nigeria. But on the flip side, if you look at India, there was an incentive scheme that was put in place to boost exports. There was approval of 100% foreign equity in single brand retail and 4% in multi-brand retail. So effort was made to increase investments that would stimulate retail, retail spending. If we look at revenue grew in Nigeria, turnover has been steady. But if you look at the market trends, you would see that there has been a shift by consumers towards more local brands. We see that more consumers are buying local brands. They're also buying other brands from Asia and other parts of Africa. And this is just linked to affordability. So they are moving away from the traditional US and EU brands. Nigerians, no doubt, have become more price sensitive. Nigerians also have become better engaged digitally. There are more people now who are influenced by what the messages they receive on social media. So digital influences people's purchasing habits. I will speak a little more about this later on. In India, we noticed that rural consumption grew significantly, and the organized sector nationally also grew, and there was also improved digital engagement. But everywhere, we all experienced challenges and demand and supply disruptions due to COVID. We had the land border closure, we had currency depreciation, and given that a lot of goods pass into and out of our borders, this had a significant impact on us. We also noticed that more of the operators of manufacturers, local manufacturers, and even the international brands, they broke bulk. They offer smaller SKUs and cheaper or better affordable packaging in response to what was happening. So let's come to Nigeria itself. Consumer confidence in Nigeria has not been too good, as you can see. If you look at what has been happening since 2016, manufacturers have not had it easy because consumer confidence hasn't been good. It's been a question of how the economy has been. The middle class has really suffered a lot. So economic recovery has been sluggish, consumer spending has been tight, and there has been widening, and continues to be widening income inequality. All of this have slowed down the growth of the consumer goods sector steadily since 2016. The operating environment has been harsh for producers, no doubt. I mean, we all know about poor infrastructure, we know about rising inflation, we know about the FX restrictions, we know about the porous land borders, and then the logistics setbacks. I mean, between the ports and the roads and the trucking, it hasn't been a very pleasant story for manufacturers. But then again, like I keep stressing, Africa is probably the single most profitable sector for FMCG spending, with the exception of East Asia. I've noticed that there have been an incursion, an influx of Asian brands, Asian manufacturers taking a stake in Nigeria, increasing their presence, their footprint in Nigeria, as well as some other African countries. And it's so easy to see why. Apart from the fact that we have one of the youngest populations globally, there's also the fact that we have the largest consumer market in Africa. Right now, it's valued at about 370 billion. There are challenges. Weak economy, high inflation, weakened currency. There have been reduced remittance from diaspora because things have been tough globally. So they've reduced what they are sending. And what they are sending, a lot of it has gone into investments rather than consumption. There's high unemployment, and there's also underemployment, where even those who are employed, they don't earn enough, their hours have been reduced, their pay has been slashed. Logistics challenge. Logistics remains a nightmare. Getting goods out of the ports, getting goods into the port, out of the ports. Trucking remains unreliable. You don't have guarantees that the trucks will get to where you need them to get to on time. The roads are bad. The state of the roads is poor. The border closure remains an issue. Insecurity, we all know about that. So what factors are really driving change amongst the FMCG players in Nigeria? And we think these factors are similar across West Africa. There are changing market dynamics influenced by digitization. We see new business models coming up, multi-channels of trade. The consumer's behavior is changing. They're going to the stores fewer times, and they're getting information. We know about the millennials. There's increasing competition with local producers. That's between the multinationals and the local producers for consumers' attention. The local producers are leveraging on the fact that they have direct access and relationships that they have built with consumers, and they're making use of this. Even consumers are getting healthier. Purchasing power, we've talked about that. Mass markets, customers are being attracted to brands that are innovative and still affordable. And the new realities that we live in, nobody wants to go out there to spend more time out there than they need to. So they are not visiting the retail outlets as often as they used to. Traditional trade remains dominant, even though we have emerging modern trade outlets, but still, there's an agreement that we don't have enough data or insight into the shopper and the behavior of the shopper. Brands are more relevant than ever before. New habits, preferences, and attitudes, the way we buy, what we buy, and why we buy, our preferences are changing. We're using styles that we normally wouldn't. There are people who can go for 3 months without stepping into the market or a retail outlet, and what they need, the minimum they need, gets delivered to their doorsteps. And this all means that we need to get more granular. Manufacturers need to get more granular about segmentation. Manufacturers need to capture richer data from the ecosystem, right from when the goods leave the factory all the way through the pipeline to the end user. Manufacturers need to capture more data. Brands need to be audited. SKUs need to be audited. Where there's need to rationalize sizes, packages, it needs to be done dispassionately. Brands need to connect with customers in more relevant ways. We need to find out, each manufacturer needs to find out where are the high growth areas. What's the profitability potential of each of my pocket of consumer segments? There's a need to reimagine and to realign the portfolio of products, the category of brands that are being offered in Nigeria. I won't spend time here because I've more or less spoken about most of them. The only one I don't think I've touched on is the increasing importance of the African Continental Free Trade area. There will be increased market access, and this means that there will be increased competition. And growth exists. We just need to find it. We need to find out each manufacturer, each producer, each marketer needs to find out where are the right stores to place my products, which categories are right, which segments, what price tiers make sense. And technology is available to provide us with all the data we need to make these decisions. And even though the economy is sluggish, or with the fact that it's sluggish, the market remains competitive. The new avenues for profits are being generated. Logistic efficiency is critical. Pipeline visibility up till the end user, knowing where your products are within the chain is very, very important. Matching your product to consumers' evolving tastes is very critical. We now find people who check on labeling, who check for information on labeling before they buy, more than they used to. So each manufacturer is concerned with how to reach new customers, how to grow their share of wallet from their existing customers, how to launch new products, how to keep their product portfolio fresh, how to keep their product quality fresh, how to make sure that they have affordable sizes and packaging. I imagine the American producers, manufacturers, and marketers are concerned about how they will better compete with the local brands and other African and Asian brands, especially the Asian brands. They have increased their footprint in Nigeria significantly. There are new distribution channels out there. How do we leverage them to boost revenue and penetration? Where are the opportunities? Reducing cost of capital, looking at innovative delivery models. Many people keep talking about the e-logistics platform, and one of the examples that people cite is the lorry model. Smarter channel collaboration. In those days, we used to have the John Holtz and those kind of models. I think we're getting back to a time when we need those models so that everybody is not trying to replicate their own structures right down to the end user. No one says, I mean, it's been done in telco. No one says you cannot collaborate with other producers to load larger trucks and send them to other parts of the country, across the country, instead of sending one truck with all your. Yeah, we've tried that, but there's need to collaborate more across the channel. There's need to be smarter in operations. Look for how to get more out of what we do, achieve better economies of scale, eliminate waste, break bulk, like I said, rationalize SKUs, and optimize where you need to. Where you find out that the customer would like to have more SKUs, please give them. But more SKUs now being the affordable ones. So you have manufacturers who have 100 naira sachets of products, 200 naira, 500. So if they want sachets ranging between 100 naira and 1,000 naira, by all means, provide it for them. If they say they don't want the large 5,000, 10,000 naira bags, then eliminate those. So there's an opportunity to get more innovative with marketing. Robotics and AI have given us that opportunity to learn more about the customer and to have a one-to-one market size of one. There's need to take out propositions that do not deliver value. Like I said earlier, there's increasing health awareness. The challenge of managing multiple brands across multiple markets for those who are multinational or continental manufacturers and producers or marketers. You have to learn to juggle, to balance between finding the right number of brands to capture the opportunities that exist in the market and prioritizing your investments. So you need to be truly customer-centric, but at the same time, you need to do it in an efficient way. So if you have to launch smaller brands, if you need to acquire some brands, this is the time to do it, but to do it profitably. So to close, how do we unlock value, increased value from the consumer product sector? I would say value engineering so that we can deliver the price points that the consumer prefers. I would say increased investment in ensuring visibility across the pipeline, making the route to market clear and as efficient as possible. I would say optimizing the channel. Look at all the logistics, and see what you need to do, how you need to partner, how you need to strip costs, how you need to offload that to someone who can do it better than you, who you just manage with service level agreements. It's time to look at innovative delivery models. Not everyone will return back to the retail outlets and to the open market, and you still need to reach them. Brands will still matter. They continue to matter. We need to get more innovative and personalized in our marketing. Most people don't watch the normal TV channels again, so you need to reach them. Whether they're on the road or they're on their phone, you need to reach them. And they're not watching TV. They're not listening to radio like before. Thanks to technology, thanks to digital, predictive analytics, we can deploy technology to understand the consumer behavior better so that we can increasingly shape products that will speak to their needs. And along with all of this, there's the macro, which is just getting our economy right so that we can stimulate more spending. Thank you very much.
Thank you very much, ma'am. I will call on Mr. Dikko, the president, to give his remarks before we go into the Q&A. Hello, sir. I think we've lost him. All right, so thank you very much, ma'am, for sharing that insightful presentation. Please, if you have any questions, please share the questions via the Q&A box. And if you would want to speak directly to the consultant, please raise up your hand, indicate by raising up your hand. Thank you. Since we Okay, so I think Zainab has a question. Zainab from Kimberly Clark.
Go ahead.
I'm trying to find. So I'll meet her so she can ask a question. Over to you, Zainab. You can ask your question.
Can you hear me?
Yes.
Thank you so much for an insightful presentation. I just had one question in terms of AFCFTA and how quickly it will be implemented. We keep hearing talks of AFCFTA is going to be implemented now, but nothing has really kicked off from a customs perspective and from a Nigerian perspective. So I just wanted to find out from your own viewpoints, when do you think realistically Nigeria will start implementing the AFCFTA?
Thank you, Zainab. So I spoke to the AFCFTA, one of the national committee members representing Nigeria on the African team. And there's a lot of work that has been done between the different countries. They're already putting in place the structures, the building blocks to make it happen. It just hasn't trickled down to what we as manufacturers or consumers will see. But a lot of background work is being done. So to answer you, by Q4, I believe that we'll begin to see more traction. We'll begin to see more traction, really, this year by Q4. Because he did take me through, the person I spoke to took me through their plan, their implementation plan. And it showed that they were moving with engaging customs and all the other regulatory bodies across the countries and getting the agreements that they need to have in place. So it looks to me like there will be traction by Q4. I hope that answers your question.
Yes, it does. Thank you very much.
You're welcome.
Okay, so
the next to questions, Joseph. If there are no questions, we can just have a robust discussion.
Yeah.
What do attendees think?
Okay, so all right, noted. We have another person that would like to ask a question. Abdullahi Ali from FIRS. We are meeting him now. Please go ahead, sir.
Hello, good evening.
Good evening.
You can hear me? Yeah,
yes.
Thank you for a very wonderful and then summarized presentation. My question is bordering around the low GDP we have in Nigeria compared to other countries generally. But my problem is going with the GDP. We have a very low GDP, but we have a very large population, a large consumer. The fast-moving consumer goods is expanding on a daily basis. So I find it very difficult to match the two. We, our own, in our own side of taxation, we always shout we have a low tax rate to the GDP compared to South Africa and other countries. And then even with the consumer discount index, we're having a low GDP despite the population and then the expansion of those. So I find it very difficult to marry the two because market depending on the population is a very good factor whenever you are selling. And at the same time, we have a very low. So I find it, listen, I want the resource person maybe can put one or two explanations to that point. Thank you.
Thank you, Mr. Liu. And I share your confusion at times. But then again, I mean, we all know that even though we have the population, we don't have a lot of productive activity. And inflation has played a part. So, like I showed earlier in one of the graphs, Nigeria spends at least 25% of its budget in servicing debt. So that is 25% less available to focus to spend within Nigeria that will trickle down and will stimulate spending in Nigeria. In addition, like I said, productive activity is very low. So we're talking about India. I compared us with India and Kenya. In India, interestingly, even the rural areas are experiencing more growth because the government has put in place an export incentive scheme and because they are productive, they produce. We don't produce enough, even though we have the population. And even though we have the population and we should be buying, we don't buy enough because we don't have the money. And because inflation is high. And we don't have the money because a lot of the money is going to service debt, pay government wages, and a lot of the money is not directed to the sectors of our economy that will stimulate increased spending, if I may put it that way. So we're the largest consumer market in Africa. However, we don't produce enough. Our currency is weak. Inflation is high. Unemployment is high. Even underemployment, the people who are employed, they can't afford it. So everyone is trying to keep body and soul together and buying just what they need to buy. And even if you want to produce, getting goods in from the port is a challenge. The roads themselves are not all in a good state. So there's so much that contributes to ensure that we're not spending a lot, businesses are not growing, consumers don't have enough money in their pocket to buy. I hope this helps. And I believe there are others who also have other views on this. So if others can also contribute, it would make it a very enriching discussion, conversation. Anyone else who has something to add to that?
Okay. If you want to discuss directly on this topic, please indicate so that we can unmute you.
There's limited credit to private sector in addition to that. So we don't have access to credit that we can use to generate income and that would stimulate our spending. How many people have access to credit in Nigeria? Very few. For you to have access to credit, you need to have a job or you need to have a viable, thriving business. And by the time you have that access, half of those who do have that access, they really don't need it. The people who really need it to stimulate spending, they don't have that access.
Thank you very much, ma'am. Mr. Abdullah, you still have your hands raised up. Do you still have a question?
Okay, okay. Oh, fine, fine. No search on that.
Oh, okay.
Yeah.
Okay, so Mr. Olufemi Adeniko has a question. I'll be omitting him. You can go ahead.
Good afternoon.
Good afternoon.
Good afternoon, Ms. Abayomi. Thanks for the presentation.
Welcome.
All right, even though I joined a bit late, I just want to find out I just want to have the understanding of the investment in pipeline. You know, when you are concluding, that's when I came in. So I've gone through others, I can understand, but the investment in pipeline, I want you to shed more light on it. Thank you.
Okay, investment in making your pipeline visible. So you may need to invest in technology, not only from the manufacturer's end, but even with your trade, your channel partners, both at the wholesale and the retail outlet end. You may need to invest in technologies that would make it visible. So when you send goods to your channel partners and they send the goods also to their customers up to the retail end, you can put in place investment in technology. You can invest in technology now such that you will know when those goods are leaving the shelves or leaving the shops. So investing at every point of your pipeline so that you know when they're running out of stock, you know what SKUs they sell, which ones of the brands, the products you have in the category that they sell, which ones they don't sell, and so that you can shift it to where it gets bought, basically, and you can anticipate what they would need and make sure they don't run out of. So investing in making your own pipeline visible to you entirely. So you know how your goods are flowing. You know where they get stock and why they get stock. You know how much of what you sell in Lagos goes across the border, how much of what you sell in Gombe or in Calabar goes out, or Maiduguri goes across the border. And you know how much is used here and how often and which sizes move, so that you can plan better on what to produce and what to invest in. I hope that clarifies.
Yes, I get it. Thank you very much.
You're welcome. And you don't need a lot of expensive technology for some of these things. We're in the age of digital. There are some things you can do on your phone. There are some gadgets that you can place with your retailer that would help them build their business. There are alliances you can have with those who place those gadgets, with those who have those technology, so that you have access. And if, like point of sale kind of devices that will tell you what they are selling, which ones of them are your products, and how regularly, how often people are picking them. It provides you with analytics that helps you to understand their behavior, their purchasing behavior, and everything, buying behavior.
Thank you.
And some manufacturers are already doing this. They're well ahead of others. It's just that we need to do more, given the realities that we see out there.
Okay. One question here. Can you confirm the issue on credits? Were you referring to SMEs?
Can you please repeat the question?
So the question is, can you clarify the issues on credits? You made mention, I think, credits,
it's both limited credit to private sector. It's both. It's both the MSMEs and even the individuals.
Okay.
Yeah. So I have a small business. I can't just walk into my bank and collect money. get a loan. I'm an individual. I would like to buy a TV. I can't afford it, so I have to wait until my employer gives me a bonus in December before I can buy it, because I don't have access to credit that would allow me to buy it. So both the retail spender and small businesses, small and medium scale businesses, there's limited credit available.
Okay. One question. So, I know you've dealt with this space for several years. So with the AFCFTA coming up, how ready is Nigeria's manufacturing sector ready for this initiative?
So I'll tell you what I think. But it would also be nice if a few of the attendees who work in the manufacturing companies can also chip in.
As well. Okay.
Yes. Okay. I don't think many are ready. So a few of the manufacturers are already used to continental sales, but continental sales in that they have distributors who take it across the border on their behalf. Theirs is just to sell the product. But many don't actually know how much of their goods get to other African countries. They know their goods get there, but they can't trace it. They can't track it and say, this is the percentage of what I sold in Q1 that went into Congo, that went into Ghana, that went into Republic of Benin. We need to invest in getting that, and be clear about that, in finding out what I need to tweak, not just in my packaging, in my SKU, in my price, to get more consumers to take my products out there. So to answer your question, are they getting ready? Maybe a few. I imagine that by now in boardrooms and even in strategy discussions in manufacturing organizations, they will be talking about the likely impact of this, how they can defend their own space in Nigeria against the influx of other African goods, and also, very importantly, how they can get more goods out there, how they can increase their share of the African markets, what they need to do, who they need to partner with, the alliances they need to form in those African countries to get ready. A few of the banks are getting ready. They have branches in some of those countries, but are the manufacturers getting ready? I'm not quite certain that enough, that we have the critical mass of manufacturers that are positioned to take advantage of that. But additional views from attendees are welcome.
Okay, great. Okay, if you would like to share or ask questions, please indicate so that we can unmute you from our end. Okay, so David Bidako, I'll be meeting from AFEX.
Good afternoon, everyone, and what an interesting session so far. I joined a little bit late, but I think I would love to ask questions around the fact that, a lot of manufacturers in Nigeria are kind of dealing with some structural issues that's coming from the whole macroeconomic space. And in the face of, or in the reality of after coming up, right, a lot of them may not be able to compete due to the whole high cost and everything. So I think I would love Mr. Abayomi to actually shed light on what our authorities can do to kind of help out in this regards. So we're still dealing with issues around multiple exchange rate windows, issues around infrastructural gaps and the likes. And also the fact that even if you look at the numbers of some of these consumer goods firms, they're not really doing too well, right? And you can see some even listed on the stock exchange not really doing too good. And this largely because of the whole issue around consumer spending, the fact that purchasing power is very low, and other bottlenecks around the economy. So in your own view, Ma, how do you think we could actually turn the tide and ensure that a lot of these manufacturers begin to act competitive in the face of this of recent developments in the global space? Thank you.
Thank you very much. So the manufacturers have blocks, BLOC. They have blocks where they come, and in those blocks, they come together and they analyze government submissions, policies, and they come up with what they need, what would. So I believe that the Manufacturers Association, I believe that the NASIMA and the different chambers of commerce are already coming up with what they think government can do to help by way of policy to make it easier for them to compete with the African Continental Free Trade Agreement in place. In addition to that, there are things they also have to do themselves. Part of what I talked about was what you call value engineering. So work back to what you need to do to strip off the cost and still give the consumer that product that he or she wants at a price that is reasonable, that is affordable, without compromising quality. What do I need to do? What do I need to, how do I strip off the cost? So there's a need to do some value engineering. So that's internal. Let's relook how we do some things. Let's relook at all the things we do in-house. Do we have to do all of them in-house? Where can we take out costs? Yes, one of the things we would hear manufacturers talk about is cost of energy. Even with energy, what can we do to take out some costs? And then as a block, as an interest group, what are we doing? What are we putting before government to say, we need this if we are going to be more competitive, if we're going to defend our markets, our market share? I hope that helps.
Yeah, sure. Thank you very much, Ma.
You're welcome, sir.
Okay.
There's a lot that technology can do to help us to strip off costs. I just mentioned the fact that people do not gather the way they gathered before. People don't watch as much TV or as much radio. They still are interested in social media, but they are not where you would traditionally find them. Are you still spending on traditional media? How much are you spending on predictive analytics so that you understand your consumer better, so that you even know you can predict when the consumer is going to buy and what he or she is going to buy? Are you using those innovative delivery models that are out there? People are revolutionizing the cargo transport value chain, the entire cargo transport value chain. Are you out there talking to them, making the necessary alliances to enable you to get your products out there at an affordable cost and a quality that the consumer wants?
Great. Okay. So one question or one suggestion is to that was point how government can support manufacturers, right? I'm thinking credit, so different credit facilities, but not just credit facilities in terms of cheap loans, but in terms of what government should expect from the private sector. For instance, in France, during the COVID crisis last year, there was the French government gave credits to cheap credits to the private sector, but in return they're expecting, maybe for instance, if it's the automobile industry, right? They're expecting some innovations around what's it called? Climate change initiatives. I mean, innovations in summary. right? So, I mean, if federal government is giving credits or cheap loans to the manufacturing sector, to be precise, there should be some sort of expectations from the private sector as well. So it's going to be like a win-win sort of thing. So that's my own suggestion to addition to that first point question. One question I would like to ask is, I don't know what is being done. I don't know, because one thing in Africa is that data is quite, to get data is quite difficult at times, most of the time. And looking at agriculture produce in Nigeria and areas, especially in the local areas, in villages or so, where there's a mass wastage. There's a lot of wastage due to broken value chains. So I'm just wondering, I don't know who, maybe Apex or whoever is on the call, or maybe you can share as what has been done or how private sector can come in, or maybe some sort of private sector, federal government partnerships to drive, to improve the value chains, right, in the ag space. I don't know if my question was clear.
Was the question for me?
You and anyone else.
Okay. Agriculture, government is doing a lot already. MDAs are doing a lot already, but there's still a lot to be done. Route to market is very critical. Having a postponement strategy, having a way, investing so that we can process the produce as near enough to where it's produced as possible would help.
Do you know something?
Infrastructure would help in this instance, because if we look at the 6 geopolitical
so everything I see
zones,
now, just send it to me.
if we look at the 6 geopolitical zones, there's no reason why we can't have at least 2 semi-processing hubs in each of the geopolitical zones. But there's no rail.
It's just an exception.
So when you produce it halfway, you still need to get it to Abuja, Lagos, Port Harcourt, Onitsha. How do you get it there? So working with governments to ensure that the right infrastructure is in place would help with this. There's a limit to what technology can do. Technology will tell you how much commodities are, the price of the product, but technology will not bring the product to you. So what you need to do is not bring all the products all the way to Lagos or all the way to where they will be consumed, is to have pockets of production hubs as near enough to the farms as possible so that you can produce them or partly process them before you now evacuate them to wherever in the world or in the country it's going to. That is what we need private sector to invest in doing. We shouldn't leave everything to government. We need to have enough private sector participants who will be interested enough to say, we will do this, we will come together, we will do this in the geopolitical zones, and we'll begin to evacuate what we have processed.
Yeah, I think that's capital intensive, but it's actually, you're actually right. David also has a question from Mayflex. So
okay, so mine is not really like a question, more or less like a contribution to what you asked earlier, right? I really agree with what Mr. Abayomi has actually said. And it's true that the federal government is doing a lot to in that space, right? So we've seen a lot of schemes and policies, so a lot of policies, protectionist policies in quote, jet towards that sector. And we cannot actually rule out the fact that to diversify the Nigeria economy is very important to look at, okay, what sector do we have strength in? And the agricultural sector actually comes to mind, right? But however, one of the major challenges I still faced in that sector is still around that value chain. So the area of production, storage, transportation, and also market, route to market, where these commodities will be bought. So in the aspect of production, so at FX, because we play very actively also in this space, one of the things that we've been able to do over time is to, and this is private sector playing their own part in ensuring, unlocking growth in that sector. So one of the things we've been able to do over time is to actually train farmers on farming best practices, and also now one of the challenges that farmers always raise is the fact access to loans, right? Access to credit facilities, and it's very difficult to get loans from banks. The banking sector is largely exposed to the oil and gas industry. So it's very difficult to get loans. So one of the things we've also been able to do is also to disburse loans to farmers in terms of inputs. And instead of asking for buildings for collateral, right, we ask for products for collateral. So that's one of the systems. Then also technology infrastructure, our Comex app, and also ideas around, okay, building warehouses where these farmers can actually store their products. And because one of the major challenges in this space is the fact that there are no storage facilities for these farmers to store their products, right? So before it gets to the market, a lot of wastages occur. And one of the SDG goals is also to reduce food loss and the likes, right? So I think if more private companies can come up with innovative ideas to solve issues around the agricultural space, then it's going to go a long way to actually help us eliminate food insecurity, right? And also help us to be competitive in the global space, right? We have a lot of comparative advantage in some commodities like cashew, sesame, cocoa, and the likes, right? There's no reason why we can't actually, as a country, start getting enough FX income on these commodities. However, when it gets there to the international market, a lot of news that we hear is the fact that, okay, it doesn't meet international standards and the likes. So there's need for us to start thinking around, okay, having processing centers in Nigeria that would check out for quality, check out for everything that will make these commodities internationally accepted, and also enough to meet local demand for these commodities. So I think that's what I would just love to chip in. Thank you.
Thank you very much, David. I would like to chip in as well, but we're running thin on time, so I'd like to call on Ms. Olele to give the closing remarks.
Thank you, Joseph. And first of all, I would like to sincerely thank Verraki Partners for allowing at least for taking this economic update and the very first one. Verraki Partners, as a lot of us may know, is a new business and technology solution firm, and not so new, but when you compare, from where it started, which is really the Accenture, background, we would say that it is new, but doing a lot of great things. Verraki Partners is a key member of the American Business Council, and a seat on the board of the American Business Council. I would specifically like to thank Abayomi, for the great job she's pulled together. And I know that it's not been easy to get her, and it's not been easy to even sit together or work together to get this very successful today. On behalf of all the members of the American Business Council, I would also like to thank those who have made time to attend this. This is usually meant to be a quarterly update, sharing our thoughts and insights around various sectors of the economy. So once again, for all those who've been able to attend, we say thank you, and we look forward to you attending the next one. Thank you very much.
Thank you.
Very much.